India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Markets this Tuesday morning are a little quiet around the globe. US markets were shut overnight, so no real cue or handoff in that sense. But here in India, we've had an up and up kind of a market, 13 days in a row. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Nigel and Survi. Guys, hi, good morning.
Hi, good morning, guys.
Morning.
Today I realize that it's Prashant who's popping up with the color, reminding me of fields of lavender and all of that. but maybe we can use some color, because I can think markets getting into, at least at the headline index level, a bit of a congestion.
Well, that's right. Historic moment. So good to be here. 13th straight session. We ended in the green yesterday. And let's see whether or not we can get maybe a couple of more sessions on the winning side.
Absolutely. And, so no US last night, but I think we'll trade off where we left off yesterday. And of course, expectations here. Wondered many times, right? Do we really need global markets? But on a long enough timeline, it does matter. Absolutely it does. Well, let's just quickly take a look at what you need to know. So 13 days in a row now, the market's been up, right? A winning streak like we've not seen for a long, long time. Yesterday was of course higher, but it was lackluster. It was a bit of a no momentum. It never really threatened to either break on the upside or break supports, etc. Broader market was negative, and you get those kind of days as well. I would say that maybe we are getting a little stretched here, and a negative close perhaps then will make us start to wonder if we need to pull back a little bit. That might not be such a bad thing either. It's not as if we've done a lot in these 13 days. It's been, as I said, most days 30, 40 point kind of days. And then sometimes you get these big flourish, these big moves as well. It's been 13 days. So it's a long, uninterrupted kind of move. And that doesn't go on usually for a very long time. Now, US markets, as I said, were shut overnight. And you've got the no cues out of there, and generally other markets, etc., have also been pretty quiet. You look at Europe, etc. US ISM manufacturing prints tonight, and then Friday's job data. If you're looking at what to watch out from the US, I think Friday's labor market data for the month of August is the big one, which perhaps has the potential to move markets. Which straight away then gets us to the levels, etc. Again, they remain pretty similar. We of course got above the 25,300 levels. That was the first resistance I've been putting out for the last almost 10 days now. So beyond that, you're looking at about 25,442. That is the daily upper Bollinger Band as far as the Nifty is 25,530, which is the Fibonacci retracement is concerned for the index. So two levels, 25,442 and then 25,530 with a 100-point interval between both of them. Supports come in at the hourly average, 25,121. I don't think you need to look at the daily moving averages because they are even below. And there is a gap opening up even here. Bank Nifty touched the 50% retracement, which is 51,508. On Friday, it kind of almost got to, and yesterday it got to it. Closing above this 51,508 level, where the next number is 51,943, which is the 61.8% retracement. Now, again, for the Nifty Bank, it's dithered. It's really had no momentum for a while, but this divergence cannot continue for a long time. We'll see. It's not the banks which are moving, but you got financials which are moving. Bajaj Finance, etc., for example, are a case in point. We'll talk more about that one a little later. Supports here for the Nifty Bank come in at about 51,230, which is the hourly average, and then the 40-day exponential moving average, which is 50,968. So it's a bit of a drift here with no global cues to handhold either way, up or down. And of course, we've been up for quite a bit. So a quieter kind of day perhaps is what we should expect. 22 odd points higher is where the GIFT Nifty is indicating the open higher will be at. Survi.
Oh, well, absolutely. We don't have cues overnight, but what we're seeing is Asia, and Asia is a little mixed for the time being. Markets are continuing to weigh the weak data that we've got out of China. Japan's sort of relatively better off. So we're a little all over the place. The headline on oil is not too bad, actually, because oil prices have continued to cool off. In fact, from almost hitting 81, we're back to looking at levels around 76 to 77. And that's thanks to the fact that the expectation is that OPEC Plus will go ahead and start increasing output, this month and the next month. That's what some of the agencies have been picking up, and this contrasting with a backdrop of weaker demand. I mean, that's why we've got that pressure on oil prices. But to quickly sort of talk about some of the other issues at hand, yesterday there was a lot of commentary coming in from one of the SEBI members, one of the whole-time members, Mr. Ashwini Bhatia. So this whole issue about the IPO market, main board market, and specifically the SME market, SME IPOs, SME listings, whether there's something more that may come for this space or not. What did he say? I'm just sort of reading out the statements. No checks and balances in the SME listing space and in the SME public market itself. He said that diligence required of merchant bankers, chartered accountants, and exchanges is missing. So time and again, we had the SEBI warning on the SME segment. Now we have one of the whole-time members publicly speaking about it. Yesterday, you heard Mr. Vijay Kedia saying that he is completely staying away from this space. So let's see how this plays out and whether just sentimentally it has a bit of a rub-off impact, because what we've seen is some profit taking in the mid-cap market. Remember, there's been buying gradually shifting to large caps, and even yesterday the mid-cap market was underperforming. So let's see how this plays out. Let's come to the fund flows picture now. And here you had some buying on the FII front after quite a long time. About 1,700 crores of buying coming in, and for a change, it was actually domestic institutions that were at a net level. There was sort of sitting on the marginal side, about 350 crores of net buying coming through. Today, I reckon the focus is going to be really all about individual stocks. So just a flavor, and we'll hear more in our top 10 segments. And when the team sort of comes in, Keynes is going to be setting up India's 5th semiconductor facility for testing, for assembly, and we'll talk to the company as well. There's HAL, large, big contract. They'll be supplying engines for the Indian Air Force's Su-30 MKI aircraft. It's a big contract as well, 26,000 crores. Muthoot Finance's MFI arm is finally going to make its way to the street. The listing of Belstar Microfinance will happen as it's gotten the approval for the IPO. There's Adani Green. Yesterday, remember, Adani Power was moving. Adani Green, they're doing a JV, and Total is putting more money in that JV. So let's see. I reckon that it's going to be more about individual stock action, even if the headline index gets into a bit of a consolidation batch.
Well, a couple of technical indicators suggest that the uptrend is intact, but the pace of the uptrend may slow down a little bit from here on. That's at least what the data points are suggesting. And in yesterday's trading session, well, you had the Nifty as well as the India VIX. Both of them moved in the same direction. Remember, normally there's an inverse relation between the two, and that sometimes calls for some kind of cautious view just in the near term. So keep that in mind. The PCR as well, we mentioned yesterday, it had moved to the upper end of the band at around 1.4. In the early morning trade, it went closer to around 1.5, but it cooled off towards the end because of the kind of call writing, and now it's at more reasonable levels of around 1.18. What did the FIs do in yesterday's trading session? Well, they added more shorts than longs. I like that. Hopefully that continues. You have some shorts in the system. That helps you. But yesterday, in fact, the FI participation itself was a little bit low. Though if you look at it, well, the short positioning now is holding around that 30% odd mark. Moving to the options data then, there was a bit of a short straddle that's at play out there. The same strike, you write the call, write the put, and you pocket the premium of close to around 200 points or thereabouts. But an important observation yesterday was you got the direction right. The Nifty ended in the green, but if you bought calls, you didn't make any money because there was writing being seen. More call writing, more aggressive call writing than put writing is what we saw in yesterday's trading session, which explains why the PCR did come down in trade yesterday. So just plugging in the numbers, going by yesterday's movement, going with the options data, it seems, if there's a short straddle at play, this is the broad range, in the near term, this 400-point range on. For today, the resistance comes in at around this 25,400 mark, and the support is in this vicinity of around 25,250 going by the options data. We'll also have the Nifty Financial Services Index that will play out expiry, so keep an eye out on that. Two stocks is what I'm looking at. One is Vedanta. China's in a bit of a sticky spot with regard to the data points that we're getting out there. But they've declared the third dividend. Closer around 20 rupees is what they've declared yesterday. And they already declared 15. So 35 rupees, and we're halfway through the year. Well, it's given better returns. Actually, the dividend yield is better than even an FD. But keep in mind, China's in a bit of a sticky spot. So that's a stock that I'll be tracking. That's point number one. The second one I'm looking at is Tilaknagar Industries. Yesterday, it had a price, it had a volume breakout as well. And if you look at it, November 2023, the stock made a high, and after that, it saw a big correction. Now it's moving back above those levels and it's returning back to those numbers that we saw in November 2023. It seems the street is a little bit excited about this liquor policy that's going to be implemented in Andhra Pradesh, which is around 30% of their total mix. So just keep the stock in mind. So big delivery yesterday. And with regard to that Andhra Pradesh implementing the liquor policy, the street seems to be taking a cue by what happened in UP. So that's a stock that we'll keep on the radar. Still a big underperformer, not yet at the highs that we saw 10 months ago. So keeping an eye on both these two, Vedanta as well as Tilaknagar Industries.
All right. Thanks very much, Nigel, for that. So that's essentially what we're looking at as far as the specific cues are concerned, and some of the specific stocks are as well. Stephen Englander is Managing Director, Global Head of G10 Forex Research and North American Macro Strategy at Standard Chartered Bank. Stephen, great to have you with us here. Good morning. Thank you very much. So on a day-on-day basis, no real cues here because U.S. markets were shut. But are markets in the U.S. also looking a little fatigued, Stephen? What's the overall sense? And where do we go from here in the near term?
Yeah, I think that's one way of describing it. I think the market's a little bit worried that they got enthusiastic about the Fed rate cuts too fast. Not that, we think they're gonna do 25. We think they'll do 75 by the end of the year, but the market's pricing in 100. And most of the economic data haven't come in really consistent with the need to do 50, certainly not in September, maybe not in Q4. So I think the market's beginning to be a little bit nervous that maybe rates went a little bit too far, dollar weakness went a little bit too far. And they're looking to the numbers that are coming out this week to either confirm that the Fed is going to cut at a steady pace, but not as aggressively as priced in, or whether the U.S. economy is as soft as some people say. We're kind of in the 25 basis points through the rest of this year, 25 basis points per meeting through the rest of this year, Cam.
Okay, so maybe gradual rate cuts. That's what we'll see ahead. Stephen, hi, great to have you on the show. Now, what about the carry? I mean, the early August unwind and all that mayhem that was unleashed on the market. And then there was some talk about that, even the Swiss franc carry was unwinding. So where are we with all of that now? If the expectation is that we'll get gradual rate cuts and the expectation is, maybe somehow they'll steer a soft landing. What about trading bets and positions? What do you see around?
We think the dollar could strengthen in the short term just because of all the factors that I mentioned, that maybe it went a little bit too far. But we think the market's basically right, that by the middle of next year, we're going to be at 3.5. That will erode the U.S. rate advantage tremendously, both in nominal terms and in real terms. So we think that, say towards the end of this year and certainly in 2025, it will be a weak dollar year. Question, is it a carry trade or is it a dollar unwind trade? It's often they're used to mean the same thing. It's not quite the same thing.
Hi, Stephen. Let's talk about, the Indian markets as well as the Indian macros. How are you reading, data points? Because GDP is fairly okay. Inflation has cooled off a little bit. So my question to you is, how do you see the RBI reacting now? We'll have the Fed that will be cutting, which is always good for an emerging market like India. And your view on the macros, how they're shaping up?
Well, we think that the RBI is going to cut twice, once in Q4 and once in Q1 next year. So it's not a terribly aggressive forecast. We don't think that the INR is going to move very much. We think there's going to be a lot of stability, which may be good for other Indian markets, but we don't think that the FX market is going to be particularly exciting.
Got that. Stephen, a quick conversation this morning. Appreciate you joining in. And it's a pleasure having you here on CNBC TV18. So that's a global picture. As we've been saying, later this week on Friday, we get the jobs data. And then maybe there'll be a bit of fireworks as well. I hope not too much like we had after the last one. But it's an important data point nevertheless. I think we'll take a quick break, but we'll get you some more opinion here before we go any further. So Amish Shah weighs in on the equity strategy at BofA Securities. He says, Nifty earnings saw slight month-on-month revisions, while in 2024 so far, upgrades were seen to FY25 and 26 earnings. Nifty earnings revision ratio increased by 3 percentage points, while Nifty 500 earnings revision ratio dropped by 2 percentage points, in line with their view of preference for large caps over small caps. Month-on-month consensus FY25 earnings upgrades were seen in healthcare and telecom, while downgrades were seen in metals, discretionary and cement.
All right, so that's the equity call. Let's now move to some money market views as well. Abhishek Goenka of India FX and Asset Management says the dollar has made a bit of a comeback after the sell-off we had seen post-Fed Chair Powell's speech at Jackson Hole. He says U.S. jobs report on Friday will be the key data point to look forward to this week. He says unless we see a major surprise on either side, he's expecting the dollar to trade in with a weak bias. He says the rupee may not underperform amid dollar weakness to the extent we have seen thus far, and overvaluation has already corrected significantly, and the rupee continues to remain incredibly stable. He adds that forex reserves have risen to an all-time high of $681.7 billion. He expects the rupee to trade in a range of 83.40 to 84.40 over the medium term.
Okay, well, Vishal Goenka of IndiaBonds.com weighs in on bonds. He says yields have remained in a narrow range last month and are facing resistance to rally further. India bonds have been the best performer in Asia this year due to supply-demand dynamics of index inclusion and the macro story. He says investors can look to make a shift into high-grade corporate bonds for better yield pickup. In global events, he adds the US FOMC meeting is still 15 days away, where a 0.25% rate cut is well priced in. He expects the 10-year benchmark bond yield to trade between 6.85 to 6.9%.
Well, we've got a lot of stock-specific action to track for you. Get to that in just a bit from now in our special Top 10 segment. For the time being, we run you through the list. Bajaj Finance, HAL, Keynes, Vedanta, MediAssist, all of them will be reacting to positive news flow. Add to the list Muthoot, Brigade, Matrimony and Gensol. While on the flip side, you have NMDC that will be reacting to negative news flow. I'll tell you what, we'll slip into a short break. You come back, we'll get into further analysis on all of those names. Stay with us.
Welcome to the show, and of course it's time to get you all of the top stocks to watch. The queues are a little thin this morning because we don't have Wall Street action, but lots of individual names that are going to be on our radar. So our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning to all of you. Abhishek, let's start with you. It's going to be all eyes on the Bajaj twins as the Bajaj Housing Finance IPO rolls out. Tell us the latest details here.
Well, the focus will be on Bajaj Finance because its subsidiary, that is Bajaj Housing Finance, has set the IPO price about a bandwidth of 66 to 70 per share, which means that the implied market cap is close to about 55,000 crore to 58,300 crore. So valuation, if you take a look, price to book value based on Q1 FY25 estimate, and for Bajaj Housing Finance, I've also added the QIP proceeds along with the equity dilution of about 6% from the IPO that they are coming out with. Bajaj Housing Finance is valued at 3.2 times when compared to LIC HF at 1.8 times, PNB Housing at 1.6 times, Canfin Homes at 2.6 times, and Aptus value at 4.2 times. So if you take a look, another peer comparison metric that I've taken is net interest margin. So Bajaj Housing Finance had a net interest margin of 3.9% when compared to LIC HF at 2.8, PNB Housing at 3.7, and Canfin at 3.6%. So key ratios, if you take a look, gross NPA, net NPA ratio, Bajaj Housing Finance has the lowest gross NPA ratio and net NPA ratio in the financial services sector in the listed space. Back to you.
All right. Thanks very much for that. So that's something which will continue to generate a fair amount of interest over the next couple of days, all the way to the IPO opening. Well, HAL and Keynes Technology is also in focus. Upasna is here with details on both. Upasna, morning.
Good morning. First up, let me start with HAL. Cabinet Committee on Security has approved procurement of aero engines from HAL, and this contract is valued over 26,000 crores. The deliveries will commence 1 year from now and is expected to be completed over next 8 years. Next up is Kaynes Technology. Union Cabinet has approved proposal of Kaynes Semicon Private Limited to set up a semiconductor unit in Sanand, Gujarat. And this decision has been taken with the objective of developing a vibrant semiconductor ecosystem. The proposed unit will be set up with an investment of 3,300 crores and the capacity of this unit will be 60 lakh chip per day. Hence, I expect both these stocks to open in green today.
Okay, we're going with green on both those two names. Thanks, Upasana, for that. Well, I'm going with one green and one red. Let's talk about the green one first. Vedanta. They yesterday went ahead and declared a dividend of 20 rupees per share. This is the third dividend that they're declaring, and this estimate was at the upper end or a little above what some analysts were estimating. So good news coming from there. The total payout will be 7,800 crores, and because the promoter entity has 56% stake in the company, they'll get roughly around 4,400 crores. Keep in mind that, we're only halfway through the year, but they've declared 15 rupees earlier, coupled with this 20 rupees odd. So 35 rupees on a stock that was worth a little less than 300 rupees at the start of this fiscal. So the shareholders will be quite happy with regard to that. So that's about Vedanta, expecting it to move in the green. But not just that, Vedanta Resources, that's been the problem pocket. The parent out there, they are making steps in the right direction because they announced yesterday that they're looking to buy back bonds worth around $1.5 billion odd. These bonds were demanding, interest cost of around 13.87%. So they're likely to be refinanced. Promoter entity in a better space is obviously good news. The only problem is what's going on in China. But otherwise, expect the stock to open up in the green. Moving to NMDC, they declared their numbers for the last month and it was disappointing. A whole host of factors have played out. Demand has been relatively weak. It's been, the monsoon season, and pricing as well has been quite weak. So put all this together, expect the stock to open up in the red.
Okay, all right. So we'll watch out for both NMDC and Vedanta. Thanks for that, Nigel. Abhishek, back to you. Tell us, Medi Assist on your radar and Muthoot Finance as well.
Well, sources say that there will be a block deal in Medi Assist today. So one of the promoter group will sell part of their stake in trade today. So the seller is Bessemer India. Deal size is about 541 crore rupees. Remaining holding will be locked in for 11.5 months from today. So that is up till 18th of July 2025. Floor price has been set at 570 per share, which is at a discount of 7.7% to yesterday's closing price. The sole BRLM to this block is IFL Securities. Muthoot Finance, the Bazaar MFI has got the nod for IPO, so they will, raise about 1,000 crore via fresh issue and 300 crores via offer for sale. Now, as of Q1 FY25, Bazaar's AUM is at 9,952 crores. Asset quality had deteriorated, so gross NPA ratio inched up to 2.36% versus 1.82% quarter-on-quarter, and they are well capitalized at 21%. Just to alert our viewers, Muthoot Finance holds about 66% stake in Bazaar MFI. Back to you.
Okay, well, thanks very much for that. So keep an eye out on Muthoot as well today as markets open. More stocks with news flow. Vamakshi is here with details. Vamakshi, morning.
Well, good morning, Prashant. Let me first start off with Brigade Enterprises. The company has launched a QIP yesterday, that is on September 2nd, and they've approved a floor price of 1,164.7 per share, which is coming at a nearly 6% discount to the closing price yesterday. Now, sources suggest that the issue size of this QIP is expected to be around 1,500 crores. This would comprise nearly 5.64% of the total equity. The indicative price, however, is at 1,150, which is at a discount of 7.3% to the closing price yesterday and 1.3% to the SEBI floor price. The funds will be utilized as per sources in the repayment or prepayment of certain outstanding borrowings, partly funding cost of land acquisition as well as some investments that they could make in JVAs and JDAs. In fact, the lockup period for this is 60 days on the company and 90 days for the promoter. So given this development, expect the stock to open higher today. The next stock that I'm watching out for is Matrimony. The stock is expected to open higher. I'm going with the green for this counter because a board meeting is scheduled on September 5th to consider a buyback proposal. And lastly, let's also watch out for Gensol Engineering, going with the green for this counter as well, and that is because the company and Matrix Gas and Renewables Consortium has emerged as the lowest bidder for EPC of India's first biomass to green hydrogen project valued at 164 crores.
All right, Vamakshi, thanks a lot for that. Well, let's do a quick recap of all the top stocks that we just covered. We're looking at Bajaj Finance, HAL, Kaynes, Vedanta, Medi Assist, Muthoot, Brigade Enterprises, Matrimony and Gensol. All of them will be reacting to positive news flow, while NNBC, that's a load ranger in the red. Okay, well, Sudarshan has been reading all those brokerage notes, but he selected a few that he wants to cover today. Hey, Sudarshan, morning.
Morning, Nigel. So CLSA has come out with a note on consumer sector. It has an overweight call on Zomato and underperform on Marico and HUL. It talks about quick commerce, and it says quick commerce is reshaping retail supply chain by flattening distribution and giving new brands increased visibility and price competitiveness. Also, it believes Zomato will be largest beneficiary and Blinkit may contribute up to 37% of FY26 EPS for Zomato. Talking about HUL Marico, it says staple marketers face risks as their distribution advantage erodes. Next is Jeffries on Alchem Labs. It is an underperformed call. Target is ₹5,080 per share. It says boosting operational margin will be the top priority near term for the management, but investments in new areas will take 2 to 3 years to bear results. Next is Citi on Tech Mahindra. It has a sell call. Target is ₹1,260 per share. It says growth is still difficult in current environment. BFSI is improving, but it is slow and gradual, and wage hikes that will be reviewed in October may also have an impact on margin. That's the reason it has a sell call.
Okay, so not so bullish on Tech Mahindra. That's the reason you got it. Sudarshan, thank you very much for that. Well, we've discussed a lot of the equity cues. Let's look at what's happening in the world of commodities as well. We have Manisha Gupta joining in with the latest. Good morning, Manisha.
Morning, and thank you for that. So, well, the US dollar index is trading at a 2-week high, and that seems to be weighing onto the market. I'll start with metals, and they only have extended their declines because the China factory activity has fallen for a 4th month in August. The Chinese manufacturing data has been on the weaker side. There is weak demand and rising inventories. So we are looking at aluminum, steel, iron ore, copper, all of these metals start Asia on a slightly weaker note. It's a similar scenario for gold and silver prices, which have come off their important psychological support levels there. The crude oil prices also have extended loss on dollar strength, weak China data, and the expectation that the OPEC and allies, some of those members at least, will increase supplies from the month of October. Also, when you look at the U.S. numbers, while the oil consumption is at a 3-year lows, but the inventories also are at a 2-year lows. All eyes in the meanwhile on the U.S. non-farm payroll data that comes on Friday, and that's going to be the next important data ahead of the mid-September Fed meeting for interest rate cuts.
All right, Manisha, thank you very much for that. So commodities there with details from Manisha. We'll take a break. We're back with Amnish Agarwal, Head of Research at Prabhudas Lilladher. He'll be joining in for some fundamental stock talk. Stay tuned, that's coming up.
Welcome back. Hope you're having a good morning. We have listed down all the top stocks that you should track. Let's get some further fundamental analysis going. We have Amnish Agarwal, Head of Research at Prabhudas Lilladher, who joins us. Hi, Amnish. Thanks a lot for joining in. Well, the top 2 gainers yesterday were the Bajaj twins, Bajaj Finance as well as Bajaj Finserv in yesterday's trading session. Wanted your view on Bajaj Finance, and particularly in this backdrop that today we have the pricing of the Bajaj Housing IPO, which appears it's coming at the upper end of the range. So your view on the stock?
Okay. Hi, Nigel.
Hi.
Good morning. So two things. First, as far as your Bajaj Finance is concerned, if you look at the charts from the last 3 years, the stock has not given any returns. The company has been growing. So the stock which used to command a price to book of, say, 9 times, now it has much more moderated. So there's a probability now that the stock has more or less bottomed out and it might give you some sort of returns from here on. That is one part. The second is the Bajaj Housing Finance, the issue of which has come, actually is a wholly owned subsidiary of Bajaj Finance. And once that stocks gets listed, I think it is going to have some rub-off effect on Bajaj Finance as well. As far as the valuations of your Bajaj Housing Finance are concerned, I think we need to look at 2 factors that post the, you can say, the merger of HDFC Limited with HDFC Bank. So we don't have any large your housing finance company in the listed space except LIC Housing Finance, which is considered more like a PSU. So that actually places Bajaj Housing Finance in a very, very sweet spot where you don't have any much competitors as far as the listed space goes. Now the stock is at the upper end of the price band, which I would say is not cheap, But given the way the company has, you can say, shown growth in the past, the way their, you can say, various return ratios are currently and they are poised to improve in future, I think the stock has got the reasonable probability to make good money. However, one will have to be patient because, as I said, the price to book of Bajaj Housing Finance is not weak, and their dependence on your leased property model that seems to be, you can say, slightly higher in comparison to most of the other places, and the pure your home loans, they are roughly around 57%. So overall, I would say good, but it's not something which is going to give you very, very sharp returns immediately.
Okay, that's Bajaj Housing Finance. Amnish, great to have you on the show today. You know, the other stock that's going to be in focus, of course, is Hindustan Aeronautics, right? Because yesterday, again, we get to know about this big, large order supplying engines for the Su-30 planes. I think the value is 26,000 crores. It's a large order. Orders are coming through. But the question always is whether the pace of execution is going to match the kind of price rise we've already seen on the stock. What's your sense on HAL?
You see, you rightly said that for many of these PSUs, which includes HAL, the orders have been coming in. And the coming of orders should not be a big surprise because we are significantly short of aircrafts when it comes to, you can say, our defense requirements. And we also need to, as a country, refurbish lot of the, you can say, the old planes. But having said that, the key here will be execution, that how fast they can execute, whether it is your Tejas aircrafts they are manufacturing, or whether these are engines. So having said that, I would say that there could be, you can say, some variation here or there. In the long term, yes, these kinds of orders give you visibility, but at the same time, the stock has run up very sharply, and at the current prices, I think there is no significant upside, at least in the near term.
Amnish, just coming to you, the other sort of top-of-mind topic this morning is, of course, all the sort of comments which we heard from the regulator, that is SEBI, on the SME IPO approval process. So here's Mr. Ashwini Bhatia, whole-time member at SEBI, and these are sort of public comments he made yesterday. Listen in.
The checks and balances are simply not there. Nobody is actually saying no to the applicants. When we were bankers, we actually many times said no to a customer. Maybe the diligence that is required of the chartered accountants, merchant bankers, and exchanges is possibly missing, and they need to do some hard work over there. Please be good doctors to these companies. Don't give them steroids when they can survive on paracetamol.
I mean, those are sort of, you know, straightforward and unusually blunt statements from the regulator that we don't hear very often. I mean, you know, some changes have taken place in the SME IPO space. For example, on listing day, there is a cap now in terms of how much the stock can go up on day one, the listing day. And of course, Mr. Bhatia later importantly also said that SEBI is going to come up with a consultation paper in terms of how to streamline the SME IPO process, the IPO approval process. Remember, right now, unlike main board IPOs, which are approved by SEBI, SME IPOs are approved by BSE and NSE, by the exchanges themselves. So, will there be sort of changes proposed in the consultation paper? I think these are things which we'll need to watch out for. So it's been an extremely vibrant, strong part of the market, and it's created a lot of wealth all across. I mean, capital markets vibrant and bustling with newer and newer SME IPOs. I think today, for example, we've got about 3-4 listings, right? We don't pay attention to these because we'll focus on the main board. I mean, but on the SME front, there is a huge amount of work and a huge amount of action which is taking place. So, the only sort of hope is the government is focused on promoting SMEs. The regulator is focused on promoting SMEs. You need an orderly market, but one just hopes that, one is not throwing the baby out with the bathwater, as they say. and you safeguard the system, but at the same time continue to promote good companies which want to raise money from the market, because it has really been a huge source of funding for smaller companies, as we've seen over the last many years or so. It's a topic we'll continue to focus on here and on CNBC TV18. Amnish is still with us. Amnish, any thoughts? You heard Mr. Bhatia there. Is it going to hurt sentiment till we actually see something come through?
Prashant, as Mr. Bhatia said, you see, there is no problem with any small company listed. The only issue seems to be the kind of subscriptions we are getting in some of these companies, 500 times, 1,000 times, and the kind of expectations which are built into it. So that seems to be, you can say, leaving some sort of a gap over there. Okay, so it is not the question of big or small. I think if there is some froth which is being created in any section of the market where there's a potential that the investors tomorrow may lose some money, and it might create some sort of an uncertainty or some pushback for the investors. Because if you can recall, maybe say 20, 30 years back, every time market used to peak with the IPO market, and it was more like it was a given thing that when people will lose money in IPOs, or otherwise they will not come to market for 2-3 years. So given the way the markets have panned out, the SME IPOs have panned out, I think it's time to be cautious, and it's better that some more checks and balances are there, because it has the potential to actually disturb the entire market momentum over the medium term.
Absolutely. I mean, genuine price and demand, you can still argue that it's just market forces and they should be allowed to run. But if there is, some gray area in the so-called gray market or the IPO market, then perhaps that's something that regulators will have to look at. Amnish, stay on. We'll have some more questions for you. Also focusing on a company right now. Insecticides India is on our radar. The company's board has approved a 50 crore rupee buyback. And to talk more about this and the plans ahead, we have with us Mr. Rajesh Agrawal, MD at Insecticides India. Mr. Agrawal, thanks very much for joining in. So you're doing a 50 crore rupee buyback. Just tell us the rationale, the cash levels right now, and your own capex plans, and the balance sheet side of things. The move behind going in for this 50 crore rupee buyback.
Thank you, and I welcome all the viewers. So yes, this was the opportunity when the company is making good cash, because after the COVID, the time was tough, but in the recent year, we are able to make good cash margins. So company is doing good, and it's perfectly we can say we are sitting on zero debt, and we had a lot of cash available with us. The team came to
How much, sir? How much is the cash level?
About 70 crores. So we plan to reward the investor. So, but it's continuously happening. Happening means like we are generating more and more cash because we are changing the product mix, and by changing the product mix and introducing the new value-added products, I'm very, very confident that we'll be like for last 3 years, we are planning to increase the gross margins or reduce the RMC. So RMC, which was trailing around 76, 74, 72%. So 70% was the target of this year, but it is visible in the half year. We will be able to achieve better. So I'm pretty confident that the type of investment which we wish to make in next 2 years, about 100 more crores in our projects, that will be able to generate in this year itself. So with the sitting on cash and having the balance, we thought it's a good time to reward the investor. So we planned a buyback of 50 crores.
All right, Mr. Agrawal, I think the street wanted either a bigger quantum or a higher price, because, in the last 10 days or last, I think 7 days, the stock has corrected, I think, from around 1,070 rupees to 922. From a shareholder's perspective, it's always dil mange mo, right? But that's about the buyback, and you've explained your rationale. Let's focus on business. For this year, what kind of a growth are you looking at in revenue terms? I think on volumes, you were guiding for high teens or 20% also. You could confirm that. On the revenue parameter, what kind of growth? And margins, I think you were hinting at closer on double digits. So 3 numbers: revenue growth, what will exports look like, and margins.
Okay. So revenue growth is not a big target. So it can be somewhere between 5 to 10%. But in terms of volumes, yes, we'll be growing. And then we are going to grow on the premium product side. So generics, I've done a lot of tail cutting also in this technicals and the formulations brands. So this will further increase the momentum of our generating the better margins. So margin side, yes, you rightly said that we'll have a strong growth. Actually, should be in the double digit, because as the volumes of the premium product goes up, it will be supporting more. So very positive. Export front, yes, the markets are still tough, but we are improving. So this improvement will be visible, some in this quarter and the next quarter also. But the growth targets with what we had for the international business, I'm not sure that we'll be able to double ourselves. But yes, definitely we'll have a positive year in the export.
But earlier you were talking, I think, about 150, 125 crores of exports.
Yes, that is possible. We crossed
125 or 150, which one?
So somewhere in between. Very difficult to comment. How much I am able to feed the market depends on that. So 150 is a possibility. 125 is the minimum, I can say.
You know, this premium products is something that you've sort of spoken about in your calls, etc. as well. This is about 30-35% of your business now?
We are working on this and trying to increase this kitty. So we divide them into Maharatnas and Focus Maharatnas. So Focus Maharatnas are touching 35%, which are large products, about a dozen. And then there is another set of Maharatna products, which is also trying to touch between 25 to 30%. So this year, the target is to cross 60% as a whole. So our major focus is, like, we focus around the premium products, and the other product range, the generic products, what we have, that will be somewhere between 35-36%. So this completes the entire kitty of our brands.
Sorry, so that 60% number is what, Mr. Agarwal?
It is the premium products.
Share of premium products as a percentage of sales,
60% plus this year.
I see, I see. And this is both that Maharatna and Focus Maharatna. So
Yes.
as this continues to grow, could you give us, because you were very confident on margins, what is the aspiration at a EBITDA margin level?
Like, we'll grow step by step. Like this year, we have made an improvement, and in the Q1 itself, we have crossed 10%. I believe that we should continue with this number in Q2 also, or it might improve a little. Let's see the performance in the September month. So the results will be clear. But I believe that with our vision of introducing more and more products and focusing around the premium product, we should be able to improve by 100 to 150 points every year for next 2 years.
100 to 150 basis points margin improvement every year. For the next couple of years. So that's a big statement. So I'm just confused about one thing. You're growing your premium products business. It's going to go up to 60-70% of the total pie. You're growing your margins. Your volume growth sort of guidance is 20%. Then why is the top line only growing at 5 to 10%? Why aren't you getting better top line growth with all of these levers coming together?
Actually, in the COVID period, we had seen that the prices in the market had gone to a level which were unbelievable, and the entire industry around the world thought they are the realistic prices. But after that, there was a sudden fall in the pricing, and that brunt we had to bear for last 2 years. Now the market has stabilized, the prices have stabilized, and it looks that the market has already touched down the bottom, and it's showing little improvements now in the pricing. So with the market stabilizing, the prices have come down. So yes, the net realization, even after achieving the volumes, is not matching what we were doing in the past. So volumes are going up, but yes, still the value is not going up that way. So we are focusing on...
Yeah, got that. So 5 to 10% revenue growth, margins will improve by 150 basis points. We're taking you at around 10% for this year at least, since you mentioned double-digit margins. Final question on working capital days. It was, I think, at around 150 last year, but you're guiding that it will come down further.
Yes.
Where does it come down to?
I don't remember exactly, but it has improved by 30-40 days. And I think that will continue, because we are working, when we are working around these products, the inventory levels also are coming down for the company as a whole. Because when we were focusing around generics, then I had to keep large stocks. So that part is also improving. So overall, you'll see the improvement.
Okay, all right, Mr. Agarwal. Thanks a lot for joining in. Well, we'll hold you to these numbers. Wish you well. The intent of buyback was good, but as I said, the shareholders seem to have wanted something more, given the fact that the stock has corrected close on 12-13% in the last few days. Thanks a lot for joining in. By the way, Prashant had told us about this MediAssist large trade that's taken place. 95 lakh shares worth around 580 crore rupees. They have changed hands at 612 rupees on. For the time being, we'll slip into a short break. On the other side, we'll focus on the technicals. Shilpa as well as Sudarshan, they'll be joining in to help us out with that.
Welcome back. So we're just about 10 minutes away from getting the pre-open rates. Cues have been a little mixed across Asia. Let's bring up the implied open. If you look at most of the Asian markets, I mean, they're tracking in between red and green, flashing red and green both. And therefore, the implied open is also absolutely flat. It isn't giving away too much. Still in conversation with Amnish. Amnish, we are also looking at Keynes. I don't know, do you have this stock under coverage?
No, we don't have.
Okay, but any broad thought? I mean, the news on Keynes, of course, is that they'll be setting up this big semiconductor facility in Gujarat. It's assembly as well as testing and marketing. And this is a very hot space in the market, right? I mean, anything to do with the semiconductor supply chain. If not Keynes, any other thoughts, any other stocks that you're looking at around it?
You see, EMS is a space we are actually looking at very closely. And if you look at the various companies which are listed in this space, I think Keynes has got a definite advantage over others because this company has actually started setting up the capacities and has got the definitive plans to do so. So given the way the focus is there on, you can say, semiconductor manufacturing, which is related to your electronics and all that, I think Keynes seems to be very well placed to ride the entire journey. I think the company had also raised funds to do the entire capex, and over the next 2 to 3 years, we believe that the growth in Keynes will be, you can say, quite strong.
Okay. Amnish, thank you for that. We'll sort of look at some technical trades as well. So this is, we have Sudarshan Sukhani with us, and we also have Shilpa Rao joining in with exactly that. Gentlemen and lady, thank you both for joining us here. Appreciate it. Shilpa, if I can start by asking you quick thoughts on how we are poised and whether this up move continues or we are at a point where things are looking a little stretched in the near term and perhaps we see a pullback. What's the sense?
Good morning, everyone, and thank you for having me on the show. Talking about the indices, we see that there is some sort of, overbought zones right now. 25,300 was supposed to be the target and it has hit. But of course, the kind of gains that we are still protecting, I believe 25,500 can also come in. So as long as we are holding 25,200 mark for the day, I believe you are well poised to see 25,350 to 25,400 and eventually 25,500 plus. Talking about Bank Nifty has to sustain above 51,500 for any sort of strong up move towards 52,000 to 52,500 mark.
Okay, that's the take on the indices. Stay on, Shilpa. We'll come back to you in just a second. Sudarshan is also with us. Sudarshan, good morning. What about the indices? Nifty, Bank Nifty, would you look at a trade on either one?
Yeah, good morning. See, the trade is the same. The market is dull and listless, but it's still in an uptrend. Now, as traders, we cannot tell the market, I'm getting bored, now show me some action. That doesn't work. We have to accept what the market is doing, and the market is doing virtually nothing. But it's telling us that the uptrend remains intact. So far as that message comes to us, every small consolidation or dip in the index is a buying opportunity. Now, you just keep a 150-point stop loss, and if your stop loss is triggered, you know that the market is changing its view. Till then, stay long, and that yesterday's breakout tells us that buying now is applicable on the Bank Nifty also.
Okay, applicable right now as well. Sudarshan, good morning. What would your specific trades be?
Well, we are looking at mid caps. Britannia is a buy with a stop under 58.65. Gujarat Gas, thanks to all that news, is a buying opportunity with a stop under 630. My only intraday short is Havells, where you can consider going short intraday with a stop above 1920. And finally, Apollo Hospitals is a buying opportunity. It's also a positional trade with a stop under 68.65.
Shilpa, what about you? What are your trades?
I have a couple of buys. The first one would be a buy in Cummins India. Cummins India is trading around 3,820. So the stock, as long as it is holding 3,750, I believe it is a very good positional trade from here as well, because the upside potential for the stock is now 4,200. So the risk reward is very favorable for the stock. The other one would be a fresh breakout that has happened in M&M Financials. So that is also a stock one should look after for the day. As long as it is holding 316, I believe the stock can definitely test 315 coming sessions. And the third one would be a buy in CanBank. CanBank also yesterday, thanks to the PSU up move. It is also showing a good momentum. With a stop loss of 110, I believe the stock can test 119 to 123.
Okay, all right. Sudarshan and Shilpa, thanks very much for your calls. We'll come back a little later and discuss some more ideas. Right now, I have to take a quick break. On the other side, we put the spotlight on the microfinance sector. We'll also get the pre-open rates. But of course, we will be in touch with Viral Shah, Vice President at IIFL Securities, to talk about the trends and the concerns around asset quality deterioration when we are looking at microfinance lenders. 16 minutes to open, just about a minute to the pre-open, and the queues are very sort of listless, lackluster, thin, call it what you want at the index level. So it's all about individual stocks. Good idea to then get some F&O trades in as well. We've got our next guest joining in for exactly that. Avni Bhatt, Senior Vice President, Equity Derivatives Research at JM Financial, is with us. Avni, good morning. So what are the bets you're going with today?
Good morning, everyone. And thank you for having me on the show. So just a small brief, a hiker in the best of condition, best of health, will take some water breaks and some rest period to relax the muscles. Only then will he be able to ascend the further from there on. And markets are in a similar state. There will be breaks in between. There will be small declines, but the hike isn't over. And we are heading level-wise. Nifty is heading towards around 25,600. With some stopover point at 25,350 and 25,500. And Bank Nifty, all eyes on 52,000. So every decline has to be used as a buying opportunity. And I think Bank Nifty is about to end its slumber. And that's why my first pick will be from the banking sector. That is, I'll go with Axis Bank. One can buy in the range of 1185 to 1190 for a target of 1240 and 1280 on the upside, keeping a stop loss of 1155. The second pick is Cummins India, a good recovery seen in the stock yesterday. So one can buy the stock for a target of 3980 on the upside, keeping a stop loss of 3685. And the third stock is ABFRL, which has been recommended as a BTST also to our clients. And I feel the upside is going to extend up to 338 to 345. And one can keep a stop loss of 310.
Right. How is the Avni? How is the entire metal space looking? Any trades there in that space?
See, metals usually move up for about 1 or 2 days and then get into a slumber for almost 4 to 5 days. So not too excited on the metal space from a short-term trading perspective. I think some more downside pending, and we will look at it in next couple of days, around 2 to 3 days. Should be good enough for the consolidation to be over.
Got that. Avni, we'll chat again. Thank you very much for that for now. Appreciate it. Well, let's talk about our momentumizer for the day as well. We have Ekta joining in with exactly that. Ekta, hi, morning.
Morning. Well, I'm looking at Aegis Logistics. That stock is up around was up around 6.7% yesterday. The turnover on BSE was 1.86 crores versus 0.53 crores, which is their 2-week average turnover. The stock is a part of the BSE 500. It's up around 187% from its 52-week low, but is still corrected around 17% from its 52-week high of around 969. Market cap of around 28,000 odd crores. The company in Q1 saw the highest ever volumes reported. Q1 FY21-25 profit was up 19% to 158 odd crores. And the company has indicated in their call that the positive momentum will be maintained from Q1 onwards. So maybe we could see further momentum on this stock.
All right, Ekta, thank you very much for that. So we'll keep an eye out on Aegis. Has been a mover for some time now. Well, let's talk about one particular sector which is not in the best of health. I'm talking about the microfinance sector. We've seen problems emerging in a listed entity. Generally, the chatter around how stress is increasing for MFIs has taken center stage as well. I mean, just to cite some data, I mean, if you look at over the last 1 year or so, MFI AUM has gone up, I think, about 22-23%, but the number of customers has grown only about 5% or so. So that kind of tells you maybe more loans to the same customer, etc. Viral Shah is with us, Vice President at IIFL Securities. He's joining in. Viral, good morning. Great to have you with us here on the program. Thanks for joining us. So, out of this entire financial space, is MFI the weak link? And what's really happening? What are the underlying sort of reasons for this, and how are stocks poised in your coverage universe?
So I think MFI is one piece of the asset quality stress that is manifesting in the, I would say, entire gamut of lending space. Apart from that, there are other pockets of unsecured loans, predominantly, be it a small ticket personal loan or the credit card loans, where the stress is coming up. And of course, the MFI sector is where, as you pointed out, the stress is coming out to the fore now. And the primary reason for that, to our mind, is because first of all, the over leveraging has happened in, I would say, not just certain pockets, but it is now quite visible across the different states. Typically, if you look at historically, MFI problems used to be like the problem in a particular state for XYZ reason. Now we are seeing this stress spread out probably across all of the states. So, for instance, the lenders in the recent con calls have called out 10 different states. Different lenders have called out different states depending on their exposures. So, I think, to my mind, this is a pretty much industry-wide phenomenon.
Okay, and lots of listed entities here. Where are we in terms of recognition of some of this stress, or this is only going to start to show up now over the next couple of quarters?
So we have started to see the glimpse of it in the June quarter. In fact, while a lot of lenders have attributed this to the elections or the heat waves, we believe that may not be the right reason, because some of those delinquencies could not have slipped into a 90+ bucket in the June quarter for some of these reasons that are being called out. That is point one. So I think we are starting to see the recognition of that stress beginning June quarter. We believe that it has not yet peaked out, and we see this further increasing. The reason is being primarily, if you look at growth right now, incrementally, all the MFIs are pulling back in terms of growth. And when they do that in an MFI space, it has actually a compounding effect. So basically, the borrowers are not able to, say, borrow from multiple lenders, and then typically that's how the over leveraging works. So there has to be an unwind of that, and because of that, I think we'll see further stress increasing. In fact, in the June quarter, the early delinquency numbers that some of the lenders reported also saw increase in the June quarter as well as in the June and July months. So I think this is further going to increase in the next couple of quarters.
Okay, all right. Hi, Viral. Good morning and good to see you. Nigel on this side. Well, overnight we had the long-awaited Bajaj Housing IPO pricing that was announced. I understand that it's in your restricted coverage universe. But if you could help us out with how do you approach the housing finance theme? Some of those stocks have already seen a big run, something like a PNB Housing Finance in the last month or so. So given that this IPO is being priced at quite an elevated number, I think 3 times price to book, how do you approach the housing finance theme?
So I think there are a couple of, I would say, perspectives here. One, right now, as I mentioned in the beginning, we are seeing a lot of stress, especially in the unsecured segments, right? So from that perspective, the secured products and the secured segments, I would say, are relatively well placed to navigate this, I would say, challenging asset quality environment. On the second aspect, if you look at the 2 large subsegments of secured lending, one would be a housing and the second would be a vehicle financing, right? I would say on the vehicle financing side, there is also a challenge on growth. All the OEMs have, of course, cut back on their growth guidances from versus what it was 3-6 months back, and we are seeing a slowdown over there. Whereas housing, from that perspective, stands out, where you have a secured product, probably not much asset quality problems, and also well poised in terms of growth. So I think from that perspective, housing finance sector would be well placed.
Speaking of housing finance, Viral, we were going through one of your earlier notes where you were looking at the impact of PMAY 2.0. And I think that note describes that this is actually not very advantageous or very beneficial for borrowers as much as what PMAY 1 was. Just expand on that point and more from the listed housing finance universe. I don't even know if Bajaj Housing, for instance, will have any benefit because they might be catering to a very different sort of a clientele. But from the listed housing finance company universe, what does PMAY really mean? And which are the housing finance stocks that you're optimistic on?
So, if I look at it, yes, the PMAY scheme, I would say it is positive but incrementally neutral. The reason why I say this is that, first of all, if you look at the contours of the scheme, out of all the schemes, the key scheme that benefits the mortgage lenders or the housing finance companies is the interest subsidy scheme. Erstwhile, it was called the CLSS scheme, now the ISS scheme. The contours of this ISS scheme is actually a bit diluted version of this erstwhile scheme. You have a lower subsidy quantum being given. The eligibility criteria at the upper end for the middle income group has been brought down from 18 lakh rupees to 9 lakh rupees of household incomes, as well as the size of the house that are eligible have been replaced with the value of a house. What all of this means is that incrementally it's not as, I would say, beneficial from a borrower as well as from a lender perspective. Definitely it is positive versus not having it. But relative to what some of the stocks were anticipating in terms of the price movement that we saw probably 2 months back, we have already seen some of that, I would say, kind of fizzle out a bit. So from that perspective, I would say it was a bit incrementally neutral. Otherwise, yes, it is definitely beneficial then rather than not having it.
Okay, so let me ask you a very simple question from a viewer perspective. We'll soon be looking at two IPOs, right? There's going to be Bajaj Finance, Bajaj Housing on one side, and there's going to be Belstar MFI, which finally sees the light of day. They've got the approval for the IPO process as well. So next couple of weeks, we'll have this MFI listing. The MFI space is clouded by a lot of concerns that you described. So between these two IPOs, you know, what do you think which one will have a better run and sort of better acknowledgement from investors, perhaps?
I would say probably, as I highlighted, the preference for the secured products and within that the housing space. So I would be probably recommending that the housing space seems to be well placed rather than an MFI space. And from that perspective, yes, of course, all these incremental schemes of the government also aids, but of course, depending on individual stocks, where they are, whether you are an affordable housing finance company or a prime housing finance company, it will be differing according to that. But amongst the two choices that you mentioned, it would be the housing finance space.
All right, Viral, thank you very much for joining us. Good getting that perspective from you. You know, just to round off this discussion, I just want to also play out a soundbite for you. This is Asim Zru, a veteran banker, now, of course, promoter, MD and CEO of SBFC Finance. We spoke with him at the Banking and NBFC Summit, and his concerns on the MFI space. Listen in.
Look at what is the total record CIBIL has. About 145 trillion is the total borrowing, that people have done on the consumer side at a consolidated level. Now, if you see what happens is that there are about 8 crore people in the country who file a return. 3 crore people pay any form of tax, and about 45% of the tax comes from just 1 crore people. So that's the math. Now, who do you think the entire 145 crore lending majority is going towards? You take out the 3 trillion lending that happens on microfinance. You take out some amount of SMEs, commercial vehicles, all of that at the bottom end. A large part of the lending happens to this taxpayer community because banks generally lend to that community. So effectively what is happening is that there's the layering happening. If you look at microfinance, for example, the latest Pulse SIDBI report basically states on the first page that the AUM of the industry has gone up by 22% and number of customers has gone up by 6%. So effectively, when you do the math, it clearly tells you that we have possibly, the party has got extended a little too late, and there is going to be a little bit of a bill coming. We have gone to one extreme of credit quality, and now we will swing a little. I don't think that there is cause of panic. I don't think that people need to really read too much into it. But have we really, from here, do we really see a 10-20 basis point increase in credit cost?
Okay, all right. So that's a view on the MFI space. By the way, in the pre-open, the Nifty is suggesting that it'll keep building incrementally, small steps. It'll build on the gains. 30 points higher is what we have. Sudarshan is back with us. Sudarshan, so what's the call now, just as we get into trade?
Buy Apollo Hospitals. Consider buying Apollo Hospitals with a stop under 68.65.
Okay, all right, got that, Sudarshan. Thank you very much. By the way, in the pre-open, the stock that's really surging is Matrimony. They're going to do a buyback, so watch out for this one as it opens. But on to our colleague Sud now to look at the top brokerage views to consider this morning. Sudarshan.
So Kotak Institutional Equities has initiated coverage on Aadhar Housing Finance with a buy call and target is 550 per share. It is a large affordable housing finance company with a long track record, and its expansion and appraisal strategy will drive 21% AUM with low credit costs. Also, stable margins and improving leverage will accelerate ROEs back to high teens. Next is B&K Securities on GMR Power. It has initiated coverage with a buy call and target is rupees 184 per share, implying upside of 38%. It says installed power capacity exceeds 3 gigawatt. It also has 2 gas-based power plants, which is currently stranded due to gas supply issues. In transportation and EPC, it has 3 operational highway projects totaling 730 lane kilometers, and going forward triggers will be energy assets consolidated by acquiring stakes in GMR Energy, thermal assets including Varora and Kamalganga, and it has successfully restructured its balance sheet, and restructuring has reduced debt burden and enhanced liquidity. That's the reason it has a buy call on GMR Power.
All right. Thank you very much, Sud, for that. So GMR Power and 2 initiations. Always good to see newer, lesser covered companies getting into the fold of institutional coverage. And the other one, of course, is Aadhar Housing. Really well regarded name. Been growing the assets under management at about 20% like clockwork for many years. And the guidance I remember from the time of our IPO interaction is about 20% growth as well. So, stocks, I think in the pre-open already reacting a little bit, 3-4%. At this point, we got the first rates coming up in in a few seconds from now. The Nifty Bank, and some of the indices as well, and then we'll get down to individual names. So what do we have? About 25,300 plus back again on the Nifty, like yesterday. So it's a flat start, to be fair. The sensex is also absolutely flat, 82,600 on the sensex. So we saw some green, and very quickly the markets come back down a little bit. We've got, the IT index, which is absolutely flat as well. Bank Nifty at about 51,389, 390 is down about 50 points. Again, I mean, it's a very, very quiet, flat kind of start on the front line. Benchmark indices coming through. The heat map coming up on the Nifty. I mean, it's more mixed, certainly more mixed as compared to what we saw same time yesterday. I think there'll be about 20 down and about 30 stocks which are higher. So that is the overall picture, with about an 18-point cut on the index right now on the Nifty 50. Shirbi.
Okay, absolutely. Well, the stock that Sudarshan was just telling us about, GMR Power, with that B&K brokerage view coming in, that one's flying away 5% higher. And even Aadhar Housing Finance, the other brokerage note that Sudarshan picked out, doing really well, 5% on that stock as well. But anyway, to talk about the Nifty itself, it's extremely quiet. Bajaj Finance is cooling off after yesterday's run, about 0.5% lower. There's some selling in Bajaj Auto as well. LTI Mindtree, Infosys, Tech Mahindra, HCL Tech, all of IT starting off weak. So that's the first trend you can note. Then on the banking side as well, things are very listless. ICICI Bank is lower. SBI is down by about 0.2% thereabouts. So what's bringing up the upside? All of commodities, metals, commodities and oil and gas. So Hindalco about 0.7% higher. Coal India, ONGC. These are stocks on the upside. And there's TCS, which is a departure from the weak IT trend. All of IT is weak except TCS. But all things put together, extremely flat on the Nifty. So, Nigel, let's look at more interesting stuff.
Well, that's right. Your Orient Cement, that one's popped up in trade. It's up close to around 5%. Good volume burst is what we are seeing. Remember, in Friday's trading session as well, it did well. Yesterday, it came in for profit taking. Today, Orient Cement is up 5%. GMR Power's locked up 5% as we speak. So, good up move is what we're seeing out there. Zomato yesterday had a bit of a down day, but the street believes that maybe if it comes into the F&O list, it could make it to the Nifty. So for the time being, that stock is popping up. It's up close to around 1.5%. Geo Financial Services as well is continuing its good run. That's up close to around 1.5%. So a flat start is what we have. Vedanta's opened mildly in the green because of the 20 rupee dividend that they have given. Also, the promoter entity has said that they'll be looking to buy back some of their bonds, which is good news. A stable promoter, something that the street likes. For the time being, though, the stock is just holding mildly in the green. Karnataka Bank is down 4%. I'm not sure what's going on here, but that's down close to 4.5% as we speak. So that's one of the top losers from the F&O traded stocks. Just keep an eye out on that one. Prashant.
Yeah, so, you got absolutely flat rates on the index, 25,273 or so. But individually, I think I'm seeing a lot of defense names. So HAL is up 3%. HAL is the biggest volume-led gainer. It'll come up. That's Hindustan Aeronautics. Mazgaon Dock is up 4%. And that's a big one as well. Large volumes on all these. Cochin Shipyard is up 3%. So it's a bit of a defense move. Garden Reach is up 5%. So you got 3 shipbuilders and 1 plane maker. That is HAL, which, I mean, so it's a, it's the Air Force and the Navy. Matrimony is up 10-11%. Matrimony, of course, we highlighted earlier on as well. And Nigel mentioned Orient Cement. Medi Assist, that block got done 2% higher now, 631 on top of yesterday's closing price. I just want to look at Aadhar Housing as well. Aadhar Housing is 5% higher, so that's good. 408 in Aadhar Housing Finance. As far as defense is concerned, Bharat Dynamics is another one, which is up about 3%. In Brigade, there is a QIP, which is up, and the stock's up about 3%, 1281 on Brigade at this point in time. I go down the list, volumes start to thin out quite a bit. Signature, that is the Gurgaon-based real estate company, that is down about 4.5%. And I think there's a large sort of block which has happened there. Ola Electric is down 1.6, 1.7%. Stocks down about at about 113. High was 156 post-listing. There is Gujarat Gas, which is down 1%. Gujarat Gas had a phenomenal move last week. And there are names like Policy Bazaar, which are down about 2% or so as well. So yeah, that's essentially what is up and down.
Just one more to the list, Prashant, and that's Zomato. CLSA impact here, because CLSA has put out a buy call and the target price is about 353. Quite a few brokers have targets northwards of 300 on Zomato. Big volumes today as well as we start off.
Well, one more, Tilak Nagar Industries, we had highlighted that yesterday it moved with very, very large volumes. It's made a fresh 52-week high today, ahead of that implementation of the liquor policy in Andhra Pradesh that the street has been waiting for. I think it takes place on October 1st. So that's another one, making fresh 52-week high.
Close eye, Nigel, on alcohol.
No, actually, in every state.
Actually, when it was implemented in UP, the branded sales went up by 3 times. So I think the street is trying to factor in, but let's see whether it actually gets implemented.
Absolutely. Yeah. Absolutely. Well, flat on the indices, 6-point change, 3-point change, 25,270 is where we are at. We have Krishna Sangvi now joining us. He's a market master today, CIO equities at Mahindra Manulife Investment Management. He's with us here on studios. Krishna, great to have you with us here. Thanks very much. I mean, things are continuing to not aggressively move higher, but I mean, the up move continues and the up move is extended even as we speak. In the past couple of times that you've been here, you've sounded a bit sort of a little defensive, right? Maybe things are getting a little excessive, but there's no telling how far it can stretch, right? In this current leg. What are your fresh thoughts on what we're seeing out there? Yesterday, we heard some comments from SEBI on the SME IPO approval process, and that has been such a big area of wealth creation and so much activity, so many listings, etc. Sometimes you get these signs from, it's not a direct kind of a sign, but you get this kind of regulatory talk. We've seen this over past cycles as well. Are we at that stage where people are starting to sit up, actually speak about what's happening, expressing worries, and that perhaps hits sentiment somewhere at the margin?
Yeah, sure, Prashant. I think you're right. Broadly, we've been cautious for some time, and in a way, no. If you look at India as an equity market, which is a play on Indian economy, etc., I think there is structurally reason to be bullish on India as an equity asset class. What's the worry can be more on relative valuations across sectors, across market capitalization. So that's been one area where, yes, clearly worry was that, rather worry is also that, a lot of small caps, maybe micro caps, possibly mid caps are, a bit, let's say, on a valuation wise stretch right now for what earning potential they have over the next couple of years. And not every stock you can discount, 27 and 29 and 31 earnings, because it's honestly too far, to cite. So what's happening right now? I'm not ignoring. I'm actually saying SME on is something we don't really track as an institution.
Yeah.
So I'll possibly ignore that. So if you really sit back and think, yeah, fundamentals are good. What's clearly happening is a surge of liquidity, and the surge pricing is what we are used to in our thing. And maybe that's a time. You figure out there are some times of the day where the pricing for the same route journey is much higher than otherwise. So possibly, yeah, today is a time somebody really wants to buy equities. Willingness to pay that higher valuation is in a way indication of surge. Yeah, if somebody can sit back and say, okay, I don't want to participate because I'm already invested well enough and the incremental money is not something I want to put to work today, is great. But somebody who's under-invested might still have that feeling that even if it's a beginning of journey for myself, so why not start today? I think that's one way to look at investor profile. If you look from a pure market side, yeah, clearly earnings are reasonably okay. Not every sector is going to grow at same time, and that's the beauty of sector rotation or profit pool participation of economy. That will play out. And the last part of let's market moves on what? Fundamentals, liquidity, and sentiments, right? So broadly, I mentioned fundamentals, good, liquidity, surge pricing, maybe. Third part is sentiment, and sentiment is clearly something coming outside India. Exactly a month back, we all would have possibly spent enough time discussing what can happen to yen carry trade, etc. Now come back today, maybe first week of August and first week of September, more or less, a lot of markets are higher than what they were. Possibly yen is very much same as what it was before that appreciation started. Yeah. So those short-term moves, honestly, are difficult. That's a sentiment, and what you mentioned about markets being expensive, not willing to give up, I think it's true worldwide. Almost every market you track globally has the same phenomenon, and that's a sentiment. I really don't know what can change.
Which is why I want to go back to the surge pricing example that you made, Krishna. The thing is, when you have to go to office every morning, you have to get into that cab. Surge, no surge. The only thing you can do is maybe choose your route a little wisely and decide whether you want to go down A road or B road or toll road or non-toll road, right? So the analogy here being that I think investors have realized that for long-term wealth creation, you've got to be in the market. Yep. That lesson has been well learned, I think, COVID onwards. So now help out someone who needs to come in and start deploying money fresh. See, it's very easy, like the day, election result volatility day, when you get the dips, people come in and buy. And we've seen that with mutual funds, right? The hard part is to decide on the route when you know you have to pay the surge because you have to go to office. So then help us navigate the route in terms of what to buy, portfolio construction.
Actually, I can't obviously deny the fact that we all need to go to office at a particular time. There's nothing much options.
No work from home?
No work from home. You have to get on the surge. If you get lucky, suddenly surge drops, you get very lucky and you get a great price at a good bargain. But otherwise, surge is the way to go these days.
So as long as you're willing to pay for that valuation, it's broadly okay, is what investors should be able to appreciate. And when you're paying for higher valuation, honestly, the real risk is, will you get an exit from the same stock at a similar multiple, or your earning growth might be offset by the valuation compression because you surge pricing, then you have to either wait for the next set of surge pricing to get off that particular stock in terms of valuation, or you say, okay, because the growth is so good, even if I lose something on valuation front, I'm still going to make absolute money for myself. And I think that's one way to look at it. Other way to look at it is really, yes, is there an alternate option, which is alternate market cap segment, which is large cap, mid cap, small cap, let's say choice, or you figure out a little bit maybe sector wise.
Yeah, so that's what, if you could help with the sectors.
Yeah. Sure. So I think market cap wise, perhaps large cap remains better. I think sector wise, it's a little bit tricky right now because what's really playing out is, financial, which has had the best, let's say, earning profile of last couple of years, is possibly having its issues coming up more from ownership. Reasonably well-owned stocks, heavy ownership in the index. So to that extent, that's something very tricky in the sense that earnings are in place. Maybe ownership is hurting. At the same time, Indian economy is opening up. Where this entire thing about China plus one is playing out everywhere in the system. You have a nice situation where a lot of new companies are opening up, which possibly were not the situation in India 2 and 5 years back, because this entire China plus one thought process, PLI as a category has really opened up new businesses which we've not seen. I mean, nobody would have seen some of those EMS kind of names, or today anything in India you look at PLI is so over encompassing that you have a ready demand being already met by some import, all you got to do is, make it in India. You don't have to worry about a customer. You just have to figure out, how to produce it in India in the quickest possible time, because there is a PLI structure. So that's a little bit tricky. On valuation, I said yes, but I think on a macro piece, yeah, there is something which is, maybe telecom has emerged as a new sector. Possibly, I think you look at it, FMCG consumer staples, that's something which is likely to do well, because you got a nice rural, recovery expected on the earnings side. And yeah, clearly, if you want, power is another sector which is still looking good. Maybe core economic
financials,
sectors.
telecom, FMCG.
Yeah, and core economic sectors, I guess, power is one, oil and gas, metals as a pack, because these are the enablers which will take us to that, make in India journey all over.
Right. All right. Krishna, when you spoke about that yen carry trade and everyone forgot about it, I recall, speaking to someone who's more trader mindset, and they said, Nigel, good coverage on the yen today, but I'll tell you what, the flows are so strong and the buoyancy so much in the Indian markets that people will only be focusing on making rupiah. And that seems to have played out, because the markets are up 1,000 points in the last,
That's right.
1 month or so from those lows that we saw. I wanted to ask you about two themes. One is railways and defense. Valuations seem to have gone out of whack. The opportunity is large, but how much of the good news has played out? And do you all recommend getting in still at these levels?
Yeah, sure. So I think same thing. If somebody is willing to pay for earnings which are 2 and 3 years down the line, it's okay. Otherwise, if you look at next couple of years, I think a lot of these earnings are priced in. Another thing which drives this sector really is the order book. And that order book accretion in a way continues, but now they have reached a stage where the current order book is anyway sizable. So, one did not worry about order book visibility beyond a number, is my sense.
But at current reckoning, what would you do? I mean, someone who has a longer time frame, maybe 3-4 years, as you mentioned, it's okay. For the time being, will you wait for a better entry opportunity in railways and defense?
Yeah, sure. I think, yeah, you're right. Prefer to wait for a better entry point, considering the kind of run-up, etc. we've had, yeah.
Okay. What's the sense that you're getting just in terms of valuation? Some of the newer listings, that's where the, Prashant started off by asking about this. That's where there's a lot of chatter. And I'm not talking about the SME board, because, US institutions wouldn't look at that. But even in terms of some of the high profile IPOs that have come to the market, Ola, for instance, there's a lot of anticipation around Swiggy. There are smaller companies that are coming. I mean, there's a microfinance listing that will probably happen soon. What's your overall thought? I mean, have you been participating just pre, post? How do you look at some of the new paper that's come to the market?
Sure. I think as economy is growing, markets giving a lot of opportunities to buy. So in a way, we do participate in all those new IPOs wherever we find attractiveness on valuation stroke, the business opportunity. So that's not a challenge. The only area where one looks at it, IPOs are coming in two categories. One is new set of companies, which possibly, there is no parallel in India in the past, available names. And other set is, existing companies which they have their own available reference points as a benchmark peers. So it's slightly difficult to really, evaluate absolute new set of companies because there's no reference benchmark. And that's what, a lot of market participants are focused on that area, because that's a new opportunity. The kind of growth one may get there is reasonably, different, and plus little bit narrative helps there, yeah.
It's a pleasure, Krishna. Appreciate you joining in, and thank you very much for being with us here on CNBC-TV18 with all of that perspective. Lovely chat as always, and we'll remember that surge pricing. We'll reassess that next time you're here. Thanks indeed. Well, the market's not going anywhere, so you don't have to worry too much about that. We're down about 7 points. Market breadth is positive. I think with about 15 minutes in, 1,600 stocks are up and about 700 stocks are lower. And defense really is, what is doing the best. HAL, Mazgaon, Garden Reach, BDL, that is Bharat Dynamics, and a bunch of other names as well, looking very, very good at this point in time. So, yeah, I mean, there is enough action as far as individual names are concerned. Indices absolutely flat, guys.
All right, well, let's focus on Bajaj Auto then. The stock has seen a good run in the last month or so. It's sitting at record highs. The August sales as well was strong. So let's find out how things are shaping up. To help us out with that, we have Mr. Rakesh Sharma, the ED at Bajaj Auto, who joins us on the show. Hi, Mr. Sharma. Good morning, and thanks a lot for joining in. Give us an update on how's the export situation. Are things improving? And in particular, Nigeria, you have told us in the past that it was, I think, 15,000, 20,000 odd, still far away from the peak of 50,000. What's the recent update?
Good morning. Yes,
Morning.
the exports business had a little bit of an uptick, and particularly retails in Nigeria after a very long time touched 20,000 units for us, because they were around 13 to 15,000, 16,000. And this is a very good sign because the larger retailers and wholesalers started to buy in, and hopefully we will see an improvement in further improvement in retail sales going forward in Nigeria.
Mr. Sharma, hi, sir. Good morning. So, can you tell us what would you project or want to see as a sustainable, steady monthly run rate in Nigeria? I mean, you've been clocking between 1,30,000 to, in good months like this one, almost 1,43,000, 44. So, say by the end of the year, by the end of the fiscal, what will be the steady state run rate for the business here, monthly run rate?
Well, it's very hazardous in this kind of a volatile situation to give you very precise numbers. I can only say that there has been an improvement. We are very confident that there will be a continued improvement as we go down the year. And last month in Nigeria was a very good sign. So we are expecting the same kind of a thing to continue with a little bit of an improvement. It's the slope of the curve which one is uncertain about. I think the direction is upwards, but the slope is what is uncertain, barring any new bombs which explode.
Sure. Okay, so let's talk about stuff that's not nearly as hazardous. And here I'm talking about hybrids, a segment that Mr. Rajiv Bajaj, in his last conversation with us, he was extremely bullish on the segment, right? And I just want to know, so how is Freedom 125 doing? I think it's just, this has been the first full month, right? Deliveries, I believe, started. So what's the uptick and what are the expectations here?
Well, we've had an outstanding response, as you probably would also know. By the end of August, we had covered about 33% of the addressable market. When I say addressable market, it is, largely the 100 to 125cc segment, which is about 75% of the two-wheeler industry, and the percentage covered by the CNG network. That is what we regard as the addressable market. So we had covered 33% of that. The dispatches were about, into 6 states, were about 9,000 units. And we have retailed about 5,500 of those. We've got about 12 to 13,000 paid bookings as I speak. And the more importantly, the feedback from the customers and from the dealers is very, very positive. People have widely appreciated the biofuel nature. The CNG, while the CNG is dramatically reducing, having the
right.
fuel
Mr.
cost,
Sharma,
just a minute. The gasoline is providing them the reassurance, and that has played back very well.
Okay. Good morning, sir. So just to get those numbers, you said 5,000 bikes sold, 12 to 13,000 bookings. Those are right. And you said 33% of the addressable. You've addressed the. What was that figure, sir? We could just explain.
33% of the addressable market had been addressed in August because it's a phased rollout. By end of September, we would be in 80% of the addressable market. Addressable market is.
You mean 33% of your network has been, these bikes are now available. That's what you mean?
Yeah, 33% of the market which is addressable, which means, as I was saying, that all those markets which are served by the CNG gas distribution network.
I see.
So we have covered 33% of that. And by September, given the, confidence which, the teams are experiencing, the dealers are experiencing, and the adoption by the customers, we should be able to address about 80% of that by end of September.
And the production capacity, I think you had said, was 10,000 units a month initially, which is expected to go up, right? By the end of the year, you had said 30 to 40,000. Could you give us a sense are those the run rates the same as it guided earlier, or has there been any change? What should we expect?
Yes, so 10,000 is what we have begun with, but next month hopefully we should be able to ramp that up to 20,000, and then as we move into January in a phased manner, it should be going up to 50,000 units. And you see, this is.
And in terms of monthly retail sales, sir, on a run rate basis, what should we expect over the next many months?
See, this is a rising curve. It's it's not an easy question to answer that what precisely would be the rate. But you
Roughly,
can imagine
sir.
As the addressable market is reached and product is supplied, I think we are quite. We expect sales to, for example, double in September, because that's a very near-term view. And then let's see how it goes in October, November, December. But like I said, we are preparing for a 50,000 unit capacity. And obviously, we want to reach that capacity. But precisely exactly how each month will unfold, there is a season in the middle, and then aftermath of the season is always a bit subdued. We will see how it goes. But I can say that from now to January, we should be aiming towards a 50,000 mark.
So I'll tell you, sir, I'll tell you why we're focusing so much on the freedom numbers, because when Parikshit was speaking to Mr. Bajaj, he put out a target saying, a sales run rate of 40,000 by January. So now you're saying capacity will go up to 50,000. So we were just trying to gauge whether the teams are aligned and they can deliver on that target that he's outlined for January. Monthly sales, I think, of 40,000. But anyway, let's focus on the rest of the portfolio as well.
Is that what you're trying to do? Trying to see whether both of us are saying the same thing?
No, you will. I'm sure, but you don't know. Sometimes the big boss says a number, so we're just trying to understand if the teams are aligned and they can deliver on that number or not. That's basically what we were trying to get at.
Well, I would say that it is important for your viewers to know. I don't think it's as important to try and see if there is some light between tracks and all that. But what's important for your viewers to know, people who have stake in Bajaj Auto, that the capacities are being ramped up to 50,000. We have retailed 5,000 last month. We expect to double it. And hopefully the retails will move in the direction of the capacity which is being put forward. And let's see how it unfolds. That's what the bottom is.
Just to close the loop on this, Mr. Sharma, you said 50,000 per month sales possible by March of next year, right? Of Freedom 125.
I think you guys are asking too many questions driven by different objectives. Let me just, for the sake of viewers, explain and give me a minute for this, okay?
Yeah.
So right now we are in 33% of the market. Next month we will be in 82% of the market. Right now our capacity is 10,000. We invoiced, we wholesaled 9,000. We retailed 5,000. Next month we will improve our capacity to 20,000. And hopefully we are retails, which already we have bookings of 12,000 units, 12 to 13,000 units. So hopefully the retails will go up from 5,000 to 10, 12,000. We are expecting this run rate to continue to go upwards. So therefore we are putting in capacity. That capacity in a phased manner will go towards, go to about 50,000 units in January. And we expect sales to move in the same direction. Now, exactly whether it is 40,000 or 50,000 is difficult to say. So in quarter four, we expect, we are preparing for 50,000 units. We expect the sales to be around 40,000 units or so. That's what the thinking is.
No, absolutely. And we're not holding you to 40 or 50. I mean, as you said, right? I mean, this is, dynamics in the market, lots of things. But we get a sense. But this is going to be substantial, right? Because your average sort of monthly volumes over the last 12 months are about 370,000 a month. And so this is going to be substantial by very, very chunky, right? How should we look at this? I mean, your market share in this 125 segment which has already increased quite a bit, has improved over the last many years. This grows substantially?
Yes, there will be a dramatic impact on the market share because of this, because a lot of the first information which we are getting is that the first movers to Freedom 125 are from the 125cc segment considerers. So there is the 110 to 125cc intenders. And therefore, and a lot of this is incremental. It is coming, as you know, our own share in the 100cc is lower, though we have a much better share in 125cc. But in the entry level 125cc, we don't have a good share. So therefore, a large part of this is incremental. Now, having said all this, I just want to say that a lot of this trajectory is dependent on the unfolding customer experience, which will be delivered by the gas distribution companies at the pumps. Because, you know, on one hand is the savings which the customer is experiencing and all the other benefits of comfort and having pride of ownership in this vehicle. But on the other hand is the experience one gets when one goes to fill in the CNG. And therefore, it is not very easy to arithmetically extrapolate, because the customer is going to weigh the benefits, which I just said, and then also look at the experience they get at the gas distribution companies. Of course, we are working with gas distribution companies, and I must say they've been very, very supportive to try and improve the experience which a two-wheeler owner gets when he wheels in his CNG bike Freedom into this station. But in the end, we have to see how these two things pan out. And that is the big ambiguity in all this, which is making extrapolation, a little bit of an art and science.
Okay. All right, Mr. Sharma, appreciate you joining in. Quite a few positives coming away from that quick interview that we just had. You're talking about exports improving, Nigeria's improved, CNG capacity moving up. Hopefully sales keep in tandem. And I was looking at a Jeffrey's note which suggests that your market share has improved in the EV vertical, which you sounded very optimistic about the last time we chatted. Appreciate you joining in, Mr. Sharma. Wishing you all the best and looking forward to having a chat with you in the coming weeks. For the time being, though, we'll slip into a short break. On the other side, we'll get chatting with Mr. Girish Koski, the MD and CEO of PNB Housing Finance. You don't want to miss this.
Welcome back. Well, we have another company on the radar and another guest with us in the studios. Girish Kousgi, MD and CEO of PNB Housing Finance, is here with us to talk about the company's business outlook. Mr. Kousgi, thank you so much for joining in and being with us here in the studios. Really appreciate it. So let's start with the growth trends, because there's been a lot of buzz around the PMAY 2.0. In the last quarter, the first quarter, I think the AUM growth was about 7% if I look at it year on year. So given that we have the new format of the Pradhan Mantri Awas Yojana, what does that mean for business and what kind of growth will you look at this year?
Good morning. Thanks for having me here. I think since last 2 years, our focus has been on retail. So we should talk about retail growth. Last year, the retail growth was 14.1% amidst so many challenges. Now we are behind all of those challenges. And this year, the guidance on retail growth is 17%. Corporate book, which was 18,000 crores, now it is down to 1,800 crores. So if you look at overall book, corporate degrowth also would impact the growth, and therefore 7 is not the one what we should be tracking. We should be tracking 14.1 last year retail growth. This year it's going to be 17%. With PMAY, I think big announcements are made. 10 lakh crore investment in housing, and PMAY, if you look at last 2 terms, the total amount spent was 1,65,000 crores, even though the allocation was 2 lakh crore. And this time, that amount itself for one term is 2,30,000 crores. So it's going to be big. We are waiting for the final details. I think PMAY is going to be big. It's going to help us on 3 counts. One, in terms of showing better growth. Number 2, it's going to, we expect that it's going to improve the margin. And number 3, the cost is going to reduce.
All right. Hi, Mr. Koski, and welcome to the studio. Good to have you here. Tell us about your NIMs then. I think it's holding around the 3.5, 3.6% odd. How is the cost of borrowing shaping up? From NHB, what is your current mix, current amount of money you're getting from them? And how does that change going ahead? What does it mean for your NIMs from here on?
So I think we have guided NIM of 3.5%. So I think for last few quarters, we are holding at about 3.65. So we will see NIM for next 2 to 3 quarters, it will be at the same level.
Okay.
And after that, it will start slowly inching up. The reason is that we are changing segments within retail. We are moving towards more higher yielding segments like affordable and emerging. Affordable we started 2 years back. Now the book is over 2,500 crores. It comes at a higher yield and therefore better margins. Emerging vertical we started this year.
Okay.
So after 3 quarters, NIMs will start inching up. Till 3 quarters, we'll be able to maintain at the current level, number one.
Okay.
Number two, in terms of NHB, because of our improved financial performance, we had access to funds last year, 3,000 crores. Obviously, this year we're expecting a higher allocation from NHB. And today, if you look at our entire liability book, NHB is about 8.5%.
Okay.
And this will go.
Give us a couple of numbers then. You said affordable and emerging, both of them are the focus areas, right? Which gives you better yield. Affordable, you said, I think it's around 2,500 odd. Where do you see this number head, say, in the next 3-4 years from here on? You must be having a target. And an emerging segment as well. What is it and where is it headed?
Okay. On affordable, our plan is to get to close to 5,000 crores this year end.
Okay.
And by FY27, affordable book is going to go to 15,000 crores.
Okay.
So now it is 2,500,
5,000.
year end 5,000, FY27, 15,000 crores. That's our plan. On the emerging, the book will be 25,000 crores by FY27. Today, the book is around 12,000 crores.
Okay.
And if you look at quarter one, almost about 33% of the incremental sourcing came from affordable and emerging. These two would come at a higher yield. The plan is to take it to 40 to 42% by this year end.
Okay. By this year end, so affordable and emerging segments will be 40 to 45% of your book.
40 to 42.
42% by the end of this year.
What is the number for emerging, sir, you said? By 27?
25,000 crores.
25,000.
So the plan is that by FY27, the retail book is going to be 1 lakh crore. Out of 1 lakh crore, affordable will be 15,000 crores, emerging will be 25,000 crores, and the balance 60,000 crores will be prime.
Got it. Now, just to press you on the margins a little bit, cost of funds are moving up, right? Across the board.
Yeah.
Where are we at? I mean, is it, are we in the initial stages and we will see upward pressure? Because, bank credit itself is going to be lower this year as compared to last year. So obviously, I mean, the pool of your funding, I mean, I'm not talking about you as such, but NBFCs, and 60-65% comes from banks. So that also, there's lesser water in the lake in that sense. You'd agree with that?
See, if you look at, let's say about year and a half back, I think market borrowings, when I say market borrowings, I'm talking about CP and NCDs, were at a slightly higher rate. Now that has eased out. So NCD the rates have dropped. CP is very attractive, right? And if you look at a bank loan, it's about 40%. So in last 5 quarters, if you see at the industry level, housing finance companies, the cost has gone up by 170 bips. For us, it has gone up by 92 bips. And we have been able to kind of maintain. Today, our cost of borrowing is 7.92%. And incremental is 7.75. So there won't be much of increase from now. We'll be able to maintain this. That is because the company is doing well. We have access to multiple sources of funds. NHB is one, CP, NCD, right? And also, in quarter 4 of last year and quarter 1 of this year, we got a rating upgrade from all the 4 agencies, CRISIL, ICRA, CARE and India Ratings. So all of these things have helped PNB Housing. But the point is, yes, the cost is inching up and bank credit may not be a challenge. The cost of bank rate could be a challenge, I think, for the industry.
But you're maintaining your NIM guidance at 3.65.
Our guidance is 3.5. So we'll be around 3.5 plus, for next 3 quarters.
How much of your books is fixed and how much of it is floating?
On the entire
I'm asking you this because, we are bracing for rate cuts. So, that could have an impact as well. So how do you see that panning out?
See, our almost about 100% is floating.
Oh.
So it's not fixed. I think this would be true for, I think, most of the companies. No, for us, you're right. So for us, when there is a rate cut, obviously it impacts the entire industry, but it's only a lag effect because your assets are completely floating, whereas your liabilities will have a mix of floating and fixed, right? And therefore, there'll be a lag in terms of managing this piece. You have to reprice your assets much faster than your liability, getting repriced.
Yeah.
So this gap is there. For us, there are few things. One, because of rating upgrade, we will be able to get loans at a better rates from all the sources, number one. Number two, we are very slowly increasing our share in high yielding segments.
Yes.
Number three, we are going to start corporate finance in next few months. So all of these things are going to help us. So for us, the pain could be there, but could be much lower during that lag period.
Just to go back to the point, since retail is such a big focus, and you said that 1 lakh crore would be the size of the book by FY27.
Yeah.
FY27. Now, in this piece, to go back to the central government scheme, what is the role of PMAY? Because we were getting feedback from some analysts as well, and they were pointing out that the 2.0 version is actually not that beneficial because it's tweaked some definitions, and I think now the middle income segment definition has come down to 9 lakhs, etc. So what is the exposure that you have to PMAY 1.0, and do you expect any incremental benefit from the second version of the scheme?
See, in last 2 terms, we had disbursed 62,000 customers.
Okay.
Amount was about 13,000 crores.
Okay.
Right now, in this PMAY 2, they have tweaked the income levels. I can understand the loan ticket size, all of those things. There has been a tweak that is to only ensure that the benefit really goes to EWS and LIG. Now, most of the companies which are focusing on affordable and emerging will tend to gain.
Right.
As I mentioned to you, I think the scheme details are still not out, but we expect that it's going to help on 3 counts: 1 in terms of growth, 2 in terms of cost, 3 in terms of margins.
So as a percentage of your book, you said the disbursement amount was 13,000 crores, right?
Yeah.
In the first scheme.
First 2.
In the first 2. So what is it as a percentage of the book now, and how much do you expect it to grow up to? Since you're expecting it to be beneficial?
I would be able to answer this question once we know the scheme details, because we know it's going to be big. We are still awaiting for the finer details. But definitely one thing I can tell you, it is going to be really big, because the allocation is such that it has to be big, and there is more focus this time on PMAY.
And credit cost will be virtually 0, right, for the year?
The credit cost for this year, we have guided 25 bips.
25 bips.
But we also have a right back opportunity both from retail and corporate. So
that's
yeah.
Absolutely. Thank you very much, sir, and thank you for dropping by to our studios. Good luck to you, to your team, as you continue to execute well over the next many quarters. Well, let's move on, and we have the management of Kaynes Technology, which is on our radar. The cabinet has approved the proposal of Kaynes Semicon to set up a semiconductor unit in Sanand, Gujarat. This is about 3,300 crore chip assembly plant, to be specific. What are the plans here? What would the revenue potential be? We have the managing director and promoter, Mr. Ramesh Kuninan, and the company's whole-time director and CFO, Jairam Sampath, joining in. Gentlemen, great to have both of you here. Appreciate your time. Rameshji, if I can start by asking you, congratulations first up on the approval. I think we've spoken about this in the past, and you at that point said that you were awaiting government approval, and that nod has now come through. So tell us, this is a packaging unit, right? I mean, sort of testing and OSAT facility, testing and packaging facility. When do you sort of...
It is a OSAT packaging facility and test facility.
Okay, got that. So what are the timelines here? When will this be up and running? What is the investment? What is the overall revenue potential from this? And what are margins going to be like?
We have done all our planning stage. We have acquired the land. So we should be able to quickly start the construction activity. Construction will take a year's time. And on the third quarter of 26, we are expecting production to start. We have lined up with various companies for starting the business. And this is where we are.
Got it. Q3 of FY26 production will start from this plant.
Yes.
What is the revenue potential and what are margins in this business going to be, sir?
Yeah. So revenue potential in this, typically this is an asset-intensive business. So for every rupee of asset capex on a gross basis, you get about 1 to 1.5 rupee of sales. So in a full-fledged manner, when this entire project is implemented, we would probably have about 4,000 plus crores of revenues coming in. In terms of margins, we've, I think from beginning itself, focused our capex on more on the advanced packaging area. So that's what is the more remunerative area. So about 25% of the capex is aimed at the legacy packaging, which is typically available in South Asia and all that. Whereas the 75% of capex is aimed towards advanced packaging, which is more the province of Taiwanese and Japanese and Americans. So we conceive of a world which have more requirement for advanced packaging, and also we don't want to be just another mass OSAT player. We want to be an integrated EX player with play in advanced packaging, which is what we expect will have a good demand going forward.
Okay.
Mr. Sampath, what are, so if you can give us a number, what are margins then? 75% towards new packaging, only 25% on the legacy side. So obviously better margins, right? Could you give us some sense of the numbers?
Yeah. So at this stage, all we can say is that it will be margin accretive to the current business. So whatever, let's say 15% EBITDA that happens in the ESTM business, these businesses eventually will have more than that kind of an EBITDA, obviously because of that intensity. And we endeavor to make similar ROCs too, by making sure that we do more of advanced packaging work.
All right. Hi, good morning, gentlemen. Congratulations on this development. A quick couple of numbers. 3,300 crores is the total investment, but the outflow from Keynes will be around 800 crores, 25% of the total mix, because central and state governments as well will be putting in. Is that a fair number to work with?
Yes, you are right.
All right, 800 crores. So that's the investment that's going out of y'all. Now, you said that the peak revenue potential will be around 4,000 crores. I'm reading a couple of sales notes that say that by 2030, they are working with a number of close to 3,500 crores of sales with high teen margins. They're referring to 18 to 20%. Is that doable at current reckoning?
Yeah, so at this point in time, very speculative in nature because we've not put the first machines on the ground, but the plan is to get superior to the existing company's margins.
Yes.
Because the asset intensity is much higher. So whatever is the current ROC, we want to target that ROC. So whatever is the required margins for that, I think will be delivered. So we have, that's why moved the capex more towards the advanced packaging, which is more remunerative.
Got it. And you're going to be commissioning it in third quarter of FY26. I believe it takes 2 to 3 years to reach optimum levels. So by FY29, we should see that optimum level. Would that be a fair estimate?
Yeah, FY29, FY30. We'd like it to be earlier, but it's a new territory. So we are a little guarded here. But I think we will gain more confidence once we have the first product out of door. And so we are looking forward to completing the POCs this year, FY25 May. I think along with construction will also get completed. Next year, we have a couple of quarters to kind of get the POC approvals and so on. And like Rameshji said, the commercial production starts off in third quarter. In fourth quarter, we'll have significant revenues, maybe 200 crores plus kind of revenues. And of course, FY27-28 will ramp up the production. And by FY30, we probably reach the potential for this level of investment that has happened.
Sir, just to clarify on the point, you said that the peak revenue potential is 4,000 crores. So is that the annual run rate that you're talking about at peak capacity when you're operating at 100%?
We don't operate at 100% technically, right? So generally about 80% plus. So 80% plus can deliver up to about 4,000 crores. It entirely depends on what kind of work we do. So, but typically the asset turns in this business of about 1 to 1.5. So we're hoping to kind of set up our businesses and our portfolio of customers in such a way that we get a slightly better run rate on the asset turns. So considering that about 3,300 crores of assets, so we think that we can do about 4,000 crores at about, it's 85% capacity utilization.
Got it. Jairam, just one last briefly, if you can respond to this. The Hyderabad smart meter facility is also started, right? What is the potential here on the revenue side?
So this smart meter facility was inaugurated last month, and I think we would do about 3.5 to 4 million units of smart meters per annum to begin with. And we will add capacities. These are fungible capacities. We could do typical EMS business too. So we would add some more capacities depending on how fast we have to execute these smart meter orders, which are right now coming at a fast clip. So we hope that the second factory also will start off shortly in the same location.
And by FY26, the number the street is working with is around 800 crores from this facility for smart meters. Doable?
Yes, it is doable.
Yes.
Oh, we appreciate it, you gentlemen joining in. Congratulations. The market likes what you all are saying. And as we speak, the stock has moved to the high point of the day. Thanks a lot for joining and giving us an insight on this recent development as well as on the smart meter facility. Well, let's get back to the markets. But before that, I think we had the new listing, Premier Energy. I think that was a new listing that came up for you on the screen. And as of now, you have a big listing bonanza that's taken place, a double in comparison to the IPO price. So whoever got allotted will be quite happy. Let's get in Nagaraj Sethi as well, technical research analyst at HDFC Securities. Hi, Nagaraj. Good to see you in. What's your view on the initial trade today? And fill us in with a couple of your ideas.
Hi, good morning, Nigel. Market has been in a constant uprun over the last 12-13 sessions. Quite a bit slow uprun, we can say, and going into a new all-time highs. Currently placed at the hurdle around 25,300, 350 levels. I'm not expecting a bigger decline from here onwards, though it has placed at the higher levels. Still, there is no indication of any significant reversal pattern building at the higher levels. There may be some consolidation or a small dip towards 25,000 is going to be the support, immediate support for this. And I'm expecting any consolidation and dips is going to be a buying opportunity. Once it takes away the immediate hurdle of around 25,400 levels, I'm expecting Nifty to reach towards the next upside target of around 25,800 odd levels. Right now, mid cap and small caps are consolidating. They are gradually bouncing back from the lower levels. I have two stocks from the segment, and the first one is the railway stock, RVNL. If you look at the chart of the railway stock, RVNL, it has been in a continuous range-bound action over the last couple of months. Recently made an attempt to move above the immediate resistance of downsloping trend line, currently consolidating, placed at the support, currently trading around 601, 602. One can look to buy at these levels, and the upside target would be 640, and one can place a stop loss around 575. And second one is Prism Johnson. Chartically, Prism Johnson has been in a consolidation phase. A large accumulation was taking place over the last couple of months. Recently, after a small downward correction, it has bounced back in today's session. Overall chart pattern is looking positive. Currently trading around 171, 171.50. One can look to buy at this point of time. 183 is going to be the target, and one can place a stop loss at 166.
Okay, all right, got that. Thanks very much, Nagaraj, for getting us the details. The stock of the morning really has to be the new kid on the block, the new listing. Look at Premier Energies and the kind of volumes this, the shares are doing right now. Over, I think, over 2.5 crores shares trading. The pop is over 90%, 90 to 95%. That's the new listing. It's a company that's engaged in the business of, solar cells, solar modules and whatnot. And of course, lots of excitement around the IPO. So that's a big one, big listing of the day. We'll take a break, come back on the other side with a roundup of all the commodity market action and the cues. Manisha joins in with the latest. Welcome back. Well, let's get to all the commodity market action. As promised, we have Manisha joining in with the latest. Manisha, so what's top of mind for you today?
Well, I'm doing some number crunching right now, Surbhi, and while we have seen commodity markets continue to be very volatile, and it is also showing on the exchanges now in sense of volumes. So as per a latest SEBI report, it shows that when you look at the turnover on exchanges for the month of July, and this is on a month-on-month basis, you have seen a 23% of a surge come in here. So the month of July actually just shows yet another month where we are looking at volumes continuing to grow, more and more people trading and hedging when it comes to commodity derivatives. Well, this is what we've done in sense of various exchanges in sense of volumes growth in the last 1 month. When you look at MCX, it has seen a 23% of a jump. NCDX, which majorly does agriculture commodities, also has seen volumes and turnover increase. NSE also seems to be coming quite strong when it comes to commodities, and we've seen 29% of increase in volumes here as well. BSE is the only exchange in all of those 4 exchanges which hasn't done really well in case of commodities, and we've seen yet another 7.5% of a decline for the month of July as well. So overall, when you look at the market share as well, it continues to be MCX which is holding the lion's share here with 98% of volumes happening on this exchange. NSE does a 1.7% and NCDX an even smaller, less than 0.5% in sense of overall market share there. Also, when you look at overall futures and options, while futures is what the commodity derivative started with, but options trading seems to be looking at a larger chunk here with 87% of overall volumes here. Interestingly, even as foreign portfolio investors are now allowed in commodity derivatives in the Indian markets, and of course, SEBI has been doing various things, easing markets in that sense, but we haven't seen volumes from here go. Remember, when it comes to commodities, still is majorly retail participation that we see in the markets here. Well, the reason for that is that the Indian derives prices from global markets, and then when it comes to India, there also is foreign exchange risk, regulatory risk as well. We have seen various agriculture commodities still in suspension till the month of December. And then the cost of derivative trading in India is much higher than what you have seen in the global markets, is the reason not too many foreign participants actually look at India when it comes to commodity hedging there.
Okay, all right, Manisha, got that. Thank you very much for joining in and sharing perspective on this. We'll take a quick break, but coming up on the other side, Lata will be in conversation with Bhaskar Lakshminarayan, CIO and Head Investment Management Asia at Julius Baer, for some market perspective.